Moving Iron Podcast is proud to be part of the Global Ag Network. The network is live, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Market Rundown with Shawn Hackett. Shawn, how you doing today?
Pretty good, Mr. Casey. Pretty good. I hear you're quite a bit of ways overseas today.
Yeah, I am over in Ukraine, so I've got a little bit of had to be a little creative on getting connections set up here, but internet's not the greatest, but I think we got it figured out here on this one here. So I've been out of the country, like I said, since Sunday, so I've been trying to keep up on as much news as I can, and it looks like you and I were talking before we started recording, and basically you're kind of laying it out there that the market was kind of hesitant to really make any big moves here yet because we have such a long growing season to go that even with all the news that's out there that supports higher prices, there's still a bit of cautiousness to the traders out there.
Well, there is. I mean, there's always been a history that the market overplays weather and the crop always turns out better or tends to turn out better than the market originally believes. And so that tendency this early in the growing season gives a lot of pause that despite hearing about 10, 15, 20 million acres of non-planted corn, yield 20 bushel per acre below trend, the market wants to see more verification that those forecasts or those dire numbers are going to take place. And while it's this early in the season and we have plenty of corn supply from last year's crop lying around domestically, and we have a record being harvested as we speak on top of winter wheat harvest coming in where a lot of low-quality wheat can be competing for feed against. The market is content right now to buy some time, wait a little, let things develop, see how the weather plays out further. It doesn't look like we'll get to the July, and better assess whether of dire forecasts of corn production or maybe somehow it's going to turn out a little bit better. So like 93, I've talked about this many times before, we had this big run-up on excessive moisture into June, where there's a strong setback into July, early August, and then the verification that the crop, and then we made the big move to new highs by the fourth quarter, and so we may be tracing out that similar pattern that the market plays out when it's trying to determine what the actual truth is.
Yeah, and then some other stuff that you see popping up out there too that could have some effect on the market. I mean, I know the stock market had a fairly positive showing of it, but where Trump and Xi are back together again, trying to make each other happy and be best buddies. So it looks like they're going to meet for a couple days at the G20 meeting next week, and I don't know what to make of it. I mean, I think it's kind of like the boy who cried wolf too many times here, but there has not been an incredible reaction on the commodity side of the business.
Commodities are very suspect, and we've been promised the bill of goods for so long, and they have. I think most people, at least in commodity land, are very, very untrusting about anything good coming from this. The stock market's more willing to run with it, and they ran with it yesterday. But the commodity markets are very guarded. As we just have not been able to get any real traction with any of these meetings. Although this is the first meeting between Xi and Trump since November, the fact that they are in fact talking is better than them not talking. But it's hard to have any idea of expectations of what might come from it. But obviously, the market should something good come from it could react. But right now, everyone is expecting more of the same right now. So
I don't. It's hard to get excited about something that it was supposed to happen so many different times and never does. So it's kind of a crazy thing out there. But on the flip side of that, the cattle market, if you take a look what's been going there, as price of corn goes up, there's an adverse effect on feeders and so on and so forth. So the cattle market's been bouncing around there with a little bit of volatility.
Yeah, for sure. I mean, when the corn market is in a weather market, a serious weather market, and it's rallying day after day after day, the fear of herd liquidation comes into play at a time when we're already producing a lot of beef. Our exports for beef have been okay, but we haven't really seen yet the strong exports that we would be needing to see from African swine fever to overcome that. So that then when the corn market corrects, like it has at times periodically, you get a big bounce in the cattle market. So it's really a volatile, making what I call a volatile bottom right now, and I think that the cattle market will continue to bounce around with grains until there's some clarity about exactly what is the true situation with the corn crop later this summer, and when is African swine fever really going to hit the shores of the U.S.? Can it happen without a trade deal? And if it can, how long is it going to take to see it? And these are all things that the market isn't sure about, but is looking for as a trigger. And we can say the same thing about hogs. I mean, the hog market's not seeing the exports it needs to see from African swine fever to keep the market elevated like it was when we were producing record amounts of domestic pork supplies. And then, of course, across the border in Mexico, we've been fighting with them now for over a year. And just recently, almost escalated the tariff war again, and they have not been buying. They have in the past, and the question is that a permanent back from them, or can a softening of tensions get them back into the hog market? And for now, until we see tangible evidence that that's the case, the hog market's going to remain under pressure due to domestic supply-demand imbalance right now.
Yeah. Yep, a lot of stuff there. It's the trade thing is a bigger deal than what I think people even could ever possibly imagine. It's whether it's with China or with Mexico, both of those countries are such a dominant trade partners of ours agriculturally that the effect is just, it's been overwhelming, I think, and we're kind of at the tail end of this stuff, especially with Mexico. Hope we're not going to move forward with the tariff thing there. So hopefully that'll start kind of correcting itself, and we can move back into being good trade partners again with Mexico.
That would certainly help. I mean, they're a big buyer of pork, they're a big buyer of corn. They're getting them back on board to buying again. Big buyer of dairy. That would really, really be helpful. That to me, I think actually, has a pretty good chance of happening. China, I have no idea. We have no idea. So,
yeah, that's a crazy one there. All right, so one more thing before we head out here. Cotton has got to have some stress on it right now, especially with the dryness in the southeast and some dryness down in Texas. So, what's your when you look at the cotton market? We've talked about it a couple times where there's some kind of lingering world recession kind of out there, and it's kind of making the cotton market contract. But in key growing areas of cotton, it's pretty dry right now. So you see cotton have a chance to really take off and maybe get back up into the 70s?
Well, yeah, I mean, the longer term picture for cotton is not good because we have a pretty consistent slowing of the global economy, and obviously buy and close items for the most part. You can pull back on that spending very easily, at least for a little while, without having to buy. So longer term, that's going to be a bearish issue. But short term, the two dominant producers and exporters of cotton, which is India and the U.S., are experiencing some very hot and dry conditions in key areas. Obviously, the U.S., we've had the Southeast, had a lot of hot and dry, little respite, but we're back to hot and dry, and now Texas seems to be getting drying up here quite a bit. But over in India, their monsoon season starts in June, it ends in September, but the key month for crops, especially for cotton, is to get good monsoonal rains in the month of July. And so far, in the month, we're well behind in Gujarat, which is the key territory that produces cotton in India. And it looks like that we're going to be moving into July, and that pattern's going to continue. And if that happens, and we start worrying about significant reductions in India production, and potentially them having to pull back from the export market some, coupled with the U.S. weather, I think we could get a pretty nice summertime weather rally bounce from mid-60s into maybe the low to mid-70s before the market would then start rolling over again as we move towards harvest and we get typical harvest pressure. So I do think there's a really, really good opportunity or a good chance for a pretty good weather bounce here that producers would be able to sell into and lock in a price that works for them.
Yeah. Yeah, there's some. I think that's one positive thing out there on that market. But still, like you said, you think it's a fairly short term kind of a bounce we're going to see, or do you think it's maybe something that could last a year or so?
The weather situation for cotton, because of the slowing demand that I see, I think it's just a short-term pop, Casey. I don't think that. I mean, obviously, it depends how bad is bad, but I mean, if we're just dealing with a kind of a more normal, drought and it pulls some less availability, I think that's going to be more than offset by reduced demand going forward. And so overall, there's not going to be a shortage of cotton. I mean, obviously, if the whole month of July is bone dry in India and the crop's down, substantially, I mean, that could change. But right now, based upon what I'm seeing, I would think that we're going to have crops that are going to come up short of expectations, but not short enough to offset weaker demand, going forward.
Right on. All right, Shawn. Well, great talking to you, man. Thanks for your input, and we will talk to you again next week, man.
Sounds good, Mr. Casey. Be safe travels, and I really appreciate the time. Thanks.
Yeah, thanks, bud. Take care.
Okay, bye.
Thanks for listening to this edition of the Moving Iron Podcast, now part of the Global Ag Network. If you'd like to continue any of these conversations, you can hit me up on Facebook, Twitter, or Instagram at Moving Iron LLC. You can also send me an email at movingironpodcast@movingironpodcast.com. You can also visit the Moving Iron Podcast YouTube channel and watch Market Roundup with Chip Nellinger, Shawn Hackett, and Angie Setzer. Also, Tax News with Glenn Birnbaum. Please visit movingironllc.com. Here you can find information, details, and updates for the 2019 Moving Iron Summit in Nashville, Tennessee. If you'd like to support the podcast, you can leave a review and subscribe at iTunes, Google Play, Stitcher Radio, TuneIn Radio, SoundCloud, and globalagnetwork.com. So until next time, let's go move some iron. This is Casey Seymour. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.